Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a world without, the stunning digital visuals in your favorite games, or those incredible breakthroughs we're seeing in medical research, all powered by artificial intelligence.
It's hard to picture, right?
It really is. It's almost like trying to imagine a world without gravity. And if you're looking for the fundamental force behind so much of today's most transformative tech, well, you don't have to look much further than one company. A company that seems to be everywhere at once, powering literally everything.
We're talking about NVIDIA.
Exactly, NVIDIA, the silent architect of so much of our digital future. And for you, the individual investor, truly grasping NVIDIA's essence. It isn't just about tracking a stock ticker. It's really about understanding the bedrock of this whole AI revolution and how one company basically came to dominate it.
And that's precisely our aim today. Our mission is to take a comprehensive look at this technological powerhouse designed to give you a clearer, more actionable understanding. We'll dissect their remarkable leadership, their intricate business model, those formidable competitive advantages that really set them apart, their compelling financials. And we'll even peer into their fascinating future directions, especially their strategic moves in quantum computing.
Quantum, right. That's a big one.
It is. By the end of our conversation, you'll hopefully be equipped to connect the dots and truly understand what matters most when you're considering a company of this, frankly, staggering scale and influence.
Okay, so to begin, let's unpack this. Let's identify the masterminds steering this colossal ship. The individuals who had the vision, right, who built this pervasive technological empire. Who is at the helm?
Well, at the very heart of NVIDIA is Jensen Huang. It's pronounced Jensen Huang. He's the co-founder, president, and CEO. And incredibly, he's been leading the company since 1993.
Since 93? Wow.
Yeah. His personal journey is, well, it's truly a legendary. It almost speaks volumes about the American dream,
Well,
Born in Taiwan in 1963, immigrated to the U.S. young. Even worked as a Denny's dishwasher before hitting the books.
I'm kidding. A dishwasher.
That's the story. He earned his bachelor's from Oregon State, then a master's from Stanford. This path, it really highlights the extraordinary possibilities within tech and the power of just relentless dedication.
Absolutely.
It's his exceptional engineering skill combined with this just unparalleled strategic vision that has transformed NVIDIA from what was once a relatively niche graphics chip maker into the world's largest semiconductor company. I mean, boasting a market cap exceeding an astonishing $3.5 trillion in 2025.
3.5 trillion. It's hard to even wrap your head around that number.
It really is. And what truly distinguishes his leadership, maybe NVIDIA's entire trajectory, was his incredibly prescient decision back in the early 2010s. He pivoted the company towards AI and deep learning.
And most were still focused on gaming, right?
Exactly. Most companies were still purely on gaming or maybe professional visualization. Huang saw the writing on the wall. He realized the parallel processing power of GPUs, initially just for complex graphics, was actually perfectly suited for the immense computational demands of neural networks.
So using gaming tech for AI.
Precisely. This audacious move was really epitomized by the launch of CEA, that's Compute Unified Device Architecture, way back in 2006. CEA wasn't just another product, it was a revolutionary software platform. It allowed developers to program NVIDIA's GPUs for general-purpose computing, basically turning them into supercomputers in a box.
Okay, so CED was the key software piece.
Absolutely critical. This foresight fundamentally changed the company's direction. It positioned them as an AI behemoth long before most people even understood artificial intelligence in its current context. So this isn't just a CEO, this is a visionary who continually reshapes the industry. It's really no surprise he's been recognized with accolades like the IE Founders Medal and a spot on Time's 100 Most Influential People list. He's not just a leader, he's practically an industry oracle.
It's clear Jensen Huang is an extraordinary figure, but I mean, a company of this scale isn't built by just one person. Who else is in this impressive leadership lineup? Who's helping execute that vision and manage the sheer complexity of a global powerhouse like this?
Absolutely. It definitely takes a formidable team. Colette Kress, pronounced Colette Kress. She's the Executive Vice President and CFO. She joined back in 2013.
Okay.
Her background is impeccable. Nearly 25 years in finance at massive companies like Cisco, Microsoft, Texas Instruments. She's not just, an accountant. She's a strategic financial architect. She's the one who oversaw Nvidia's revenue exploding from $9.3 billion to that astounding $130.5 billion in fiscal 2025.
That's incredible growth to manage financially.
It really is. Her skill in managing that kind of explosive growth while maintaining healthy margins is a critical asset. She's even been recognized as one of the top 50 most powerful women in technology.
Well deserved, it sounds like.
Then there's Chris A. Malachowski. Malachowski. He's a co-founder and senior technology executive. Foundational since day one, 1993.
So another original.
Right. Malachowski holds nearly 40 patents. He's pivotal in leading engineering and operations. You can think of him as the guardian of the company's core technical vision, making sure that as NVIDIA expands into all these new areas, its foundational tech principles and engineering excellence stay completely intact. His deep technical understanding provides that vital balance to, high-level strategy.
Got it. The tech guru.
Exactly. And rounding out this executive core, you have Jay Puri. He's the EVP of Worldwide Field Operations. He drives global sales, bringing extensive experience from places like Oracle and Sun Microsystems. His ability to scale those sales operations and build relationships with big enterprise clients is crucial for market penetration.
Sales are key.
Absolutely. Then Deborah Sjoquist, she's the EVP of Operations. She skillfully manages the incredibly complex supply chain and IT infrastructure. That role is just critical for ensuring scalability and efficiency, especially since NVIDIA relies on outsourced manufacturing and is growing so fast.
The operational backbone.
Precisely. And finally, Tim Teeter. He's the EVP, General Counsel, and Secretary. Essential for navigating the complex, always changing legal and governance landscape. I mean, when a company scales to a multi-trillion-dollar valuation, expert legal counsel is paramount for risk mitigation and strategic moves.
You need good lawyers.
You definitely do. Collectively, their deep expertise across tech, finance, operations. It directly supports NVIDIA's ambitious goals, particularly that expansion into high-growth areas like quantum computing and AI infrastructure. It ensures the company can not only dream big, but actually execute on that bold vision.
That's certainly a powerhouse team, deep, diverse expertise. And speaking of that, there's a unique advantage, isn't there, that comes with having founders still so deeply involved. Jensen Huang's famously hands-on approach, for instance. It's legendary. You see it in his captivating keynotes at events like GTC. He presents new tech like a rock star.
He really does. Great stage presence.
And Chris Malachowski's ongoing focus on the core technologies ensures they don't drift too far from their foundational strengths. This kind of founder involvement, especially with such a clear long-term vision, it often mirrors success stories like, Apple under Steve Jobs. That historically correlates with sustained outperformance and a really clear strategic direction.
It's more than just their presence, though. It's also about the incentives that drive them. NVIDIA's executive compensation is heavily equity-based. That perfectly aligns their interests with shareholders.
Right. They win when the stock wins.
Exactly. Consider Jensen Huang's fiscal year 2024 compensation. Out of $49.9 million total, a massive 78%, that's $38.8 million, was in stock awards.
Wow.
And other key execs like Colette Kress at $21.4 million and Jay Puri, $21.6 million. They also get significant portions in equity. This structure isn't just about high pay. It's about directly incentivizing long-term value creation. Their personal wealth is intrinsically tied to the company's stock performance. Now, the CEO to median employee pay ratio, which was 166.1, it's competitive within tech, but it does sometimes draw scrutiny for its scale. Still, it's worth noting, this performance-driven, equity-heavy reward structure is pretty similar among peers, like AMD. It emphasizes that their leadership team isn't just working for a salary, they're truly invested in the company's enduring success.
So beyond the individuals and their incentives, what's the internal compass? What guides NVIDIA? What's the mission, the vision, the underlying culture that really drives them to innovate at this, frankly, relentless pace?
At its core, NVIDIA's identity is driven by an incredibly ambitious purpose. Their mission isn't modest at all. It's to bring superhuman capabilities to every human in every industry.
Superhuman capabilities.
Yeah, pretty grand. And their vision is equally grand, to enable a world where everyone can experience the power of AI. Jensen Huang's personal mantra, "We're a learning machine," perfectly encapsulates the culture. Innovation isn't just encouraged, it's paramount to their existence.
A learning machine. I like that.
It fosters an environment where employees are not only permitted, but actively encouraged to take calculated risks, challenge assumptions, explore entirely new frontiers. You can see this so clearly in Nvidia's rapid and incredibly successful pivot to AI. That's a prime example of their dynamic, adaptable environment. This culture isn't just a slogan on a wall, it's deeply ingrained, built on constant evolution and this relentless drive to push the boundaries of what's technologically possible.
That strong, almost singular vision, though, especially under a charismatic leader like Jensen Huang, it can also come with inherent risks. It's undeniably been a strength, but that significant reliance on Huang himself is maybe a double-edged sword.
That's a fair point.
The absence of a, let's say, transparent, clearly articulated succession plan has certainly been a concern among investors, especially when you hear about his stock sales, what was it, around $14 million daily in 2024. That lack of clarity could potentially destabilize investor confidence if, for whatever reason, Huang were to step down unexpectedly.
The key person risk is real.
Right. Additionally, it's worth noting, you mentioned the board. Their limited governance expertise, with only one member really specializing in that area, might hinder truly effective oversight as the company continues to scale at such a rapid, unprecedented pace.
That's a valid observation, and it brings up a crucial comparison point. How does NVIDIA's leadership stack up against its key peers?
Good question.
When we compare Jensen Huang's leadership to someone like Lisa Su at AMD, who has, by the way, expertly revitalized AMD since 2014, Huang's much longer tenure, and NVIDIA's undeniable first-mover dominance in AI offer a strategic edge, it's just incredibly difficult for any competitor to match that right now.
They had such a head start in AI.
Exactly.
Huh.
And if you look at Intel's leadership, currently under Pat Gelsinger, well, they struggle with significant market share losses and internal execution challenges in recent years. It makes NVIDIA's executive team appear far more cohesive, agile, and forward-thinking in how they approach market shifts.
A stark contrast sometimes.
It can seem that way. Furthermore, NVIDIA's consistent ability to attract top-tier talent like Colette Kress joining from Cisco continually strengthens their position against competitors. It's really a testament to the strong gravitational pull of their vision, their market leadership, and the exciting challenges they offer top talent.
Okay, let's shift gears then. Let's examine the fundamental mechanics. How exactly does this technological marvel make its money? What's the core engine of its operation generating such astounding revenue?
Well, at its fundamental core, NVIDIA's business is remarkably straightforward in concept, though obviously complex in execution. They design graphics processing units. GPUs.
Right.
To really grasp their genius, think of a GPU not just as a chip for stunning visuals in a game, though it is that. Increasingly, it's the brain for highly complex, parallel computing tasks, like training those colossal AI models that underpin things like ChatGPT or developing sophisticated climate simulations.
So way beyond just graphics now.
Way beyond. Here's an analogy. If a traditional CPU, a central processing unit, is like a single, highly focused worker solving problems one at a time, a GPU is like a team of thousands of workers, all collaborating and solving countless problems simultaneously.
Ah, okay. Massive parallel processing.
Exactly. That massive parallel processing capability is precisely what makes their chips uniquely suited for the insatiable demands of modern AI and other data-intensive applications. They aren't just making chips, they're essentially manufacturing intelligence.
And what's truly remarkable is how that core GPU brain powers such a diverse array of product lines, isn't it? It's not just one type of chip. They've segmented their market presence with incredible precision.
Precisely. Despite that core GPU design focus, NVIDIA has incredibly diverse and specialized product lines. Each caters to distinct, massive markets. For the huge universe of gamers, there's GeForce. It utterly dominates the PC gaming GPU market, setting standards for visual fidelity, performance, everything.
GeForce, yep. Everyone knows that one.
Then for professionals, architects, designers, engineers, there's Quadro. It offers powerful visualization tools for intricate 3D modeling, complex simulations.
For pros.
Right. Then the Tesla and DGX lines. These are their absolute powerhouses for data centers, specifically designed for AI and high-performance computing. These are the engines driving the very core of the AI revolution, supporting everything from, say, pharmaceutical discovery to financial modeling.
The heavy lifters.
Definitely. Beyond those, they have Drive. These are advanced automotive platforms purpose-built for the rapidly evolving self-driving car segment. They work with the major automakers to bring autonomous capabilities to reality.
The car chips.
Yep. And finally, Jetson. That caters to embedded systems, crucial for robotics, drones, and that vast network of connected devices, the Internet of Things, IoT.
Okay, so a really broad hardware lineup.
Very broad. But their offering doesn't stop at hardware. They provide complementary software platforms like CUT, which we mentioned. It's absolutely critical. It acts as a universal language for their GPUs, enabling developers to harness their power. They also offer services like GeForce. Now, their cloud gaming service, which enhances scalability and deepens customer engagement directly.
Software and services too.
Yes, this broad and deep product market fit is clearly evidenced by their impressive, roughly 80% GPU market share in the AI space, and their staggering $130.5 billion in fiscal 2025 revenue. A prime example of recent success, the launch of the Blackwell platform in 2024. Their latest AI superchips, engineered for the most demanding AI model training with unprecedented efficiency.
Blackwell, right. That made huge waves.
It did. That platform alone propelled their data center revenue to an incredible $39.1 billion in just Q1 of fiscal 2026. That's a 73% year-over-year increase. So it's not just about diversity. It's about a relentless drive for dominance in each sector they touch.
That ecosystem sounds incredibly powerful. But what makes them so unique? Is it just the raw power of the chips, or is there something deeper that truly sets them apart, that provides such a significant competitive advantage?
Oh, it's definitely something much deeper than just the chips themselves, although the chips are phenomenal. A key distinctive characteristic is their fabless model.
Fabless, meaning?
Meaning they design the chips, all the cutting-edge intellectual property, but they strategically outsource the actual manufacturing to world-class foundries like TSMC.
So they don't make them themselves.
Correct.
Yeah.
This decision allows NVIDIA to focus solely on what they do best. Innovation, R&D. It significantly reduces their capital expenditures. They avoid the massive costs, billions of dollars, associated with building and maintaining chip fabrication plants or fabs. This lean approach provides incredible agility, lets them direct huge amounts of capital into R&D, continually staying ahead.
Focuses their resources.
Exactly. But the truly crucial element, the moat, if you will, is their CUDA software ecosystem, launched way back in 2006, remember?
Right, CUDA again.
CUDA is this proprietary parallel computing platform and programming model. It lets developers harness the immense power of NVIDIA's GPUs for complex tasks, AI training, scientific simulations, data analytics. This ecosystem creates an incredibly sticky environment. Meaning, once developers, researchers, engineers invest countless hours and resources building their applications and algorithms on CUDA, it becomes the industry standard. It makes it exceptionally difficult, time-consuming, and expensive for them to switch to a competitor's platform.
The switching costs.
Exactly. This forms a powerful network effect. The more developers use CUDA, the more valuable it becomes, attracting even more developers. This brilliantly aligns with NVIDIA's passion for accelerated computing and directly fuels their economic engine of high-margin GPU sales. It's a self-reinforcing cycle of innovation and market capture.
It's clear they've built something special there. And when we connect this to the bigger picture, their track record really speaks volumes, doesn't it? It's a history not just of growth, but of these pivotal moments, constant reinvention, almost like a chameleon adapting to the tech landscape.
Absolutely. NVIDIA's history isn't just steady incremental growth. It's a narrative of bold bets and transformative reinventions that reshaped entire industries. Think back. 1999, they launched the GeForce 256. Not just a new product. It was the first true GPU, revolutionizing PC gaming.
Right, the dawn of the GPU.
Then, 2006 came CUD. Not just a technical release, a strategic move. It opened the door for GPUs in scientific computing, general-purpose parallel processing, laying the groundwork for the AI revolution.
Took him a stage.
Exactly. But the decisive moment, though, was probably 2016. They made that audacious multi-billion-dollar bet on AI with the DGX-1. That wasn't just a product launch. It was a strategic declaration positioning them, unequivocally, as the leader in AI infrastructure.
DGX-1.
Got it. And most recently, 2024, the launch of Blackwell, which we touched on. It's further cemented their data center dominance, already driving billions in sales. These milestones, combined with revenue soaring from, $4.7 billion in 2015 to $130.5 billion in 2025, it perfectly illustrates NVIDIA's unparalleled ability to reinvent itself, anticipate market shifts, and consistently stay ahead.
How do they manage to operate so effectively on such a massive scale? We know they're headquartered in Santa Clara, California, but they have a truly global footprint, R&D in the US, Israel, India, China, sales offices everywhere. What does that operational setup tell us about their philosophy, their efficiency?
Their operational setup reflects a truly lean and agile philosophy. It's designed for maximum flexibility and capital efficiency. By choosing to lease facilities globally rather than owning them outright, they significantly minimize fixed costs.
Leasing, not owning.
Smart. It provides remarkable financial agility, allows them to adapt quickly to market demands, economic shifts, without being burdened by huge capital tied up in real estate. Furthermore, outsourcing manufacturing to giants like TSMC and Samsung isn't just about reducing costs, it's about optimizing flexibility and leveraging the specialized cutting-edge expertise of those foundries.
Using the best manufacturers.
Right. This strategic model lets NVIDIA maintain its focus squarely on its core strengths. Unparalleled chip design, software innovation, ecosystem development, those are the highest value activities in their chain.
But that lack of direct vertical integration, not owning the manufacturing while financially smart, it does expose them to supply chain risks, right? You mentioned TSMC earlier.
Absolutely. That's the trade-off.
Yeah.
Their reliance on TSMC, whose primary, most advanced production is in Taiwan. Well, given the ongoing geopolitical tensions surrounding Taiwan, this presents a potential vulnerability, a single point of failure that investors absolutely must acknowledge.
A Taiwan risk.
Exactly. Despite this, it's crucial to stress this fabless model is also their core strength. It allows NVIDIA to prioritize design and innovation, where they truly excel and derive their insurmountable competitive edge. It's a calculated risk that has, undeniably, paid off handsomely so far.
That's a critical point about supply chain risk, but what about their distribution model? And how predictable is their revenue stream, given all these factors? Do they have a diversified customer base to balance things out?
They employ a robust, multi-channel distribution strategy designed to reach every corner of the market. They do direct sales to large, hyperscale enterprises, think AWS, Microsoft. They forge strategic partnerships with OEMs, like Dell, and they also work with a vast network of distributors for consumer products like GeForce cards.
Covering all bases.
And their cloud gaming service, GeForce Now, is a prime example of leveraging cloud distribution. Enhances scalability, deepens customer engagement directly, provides a direct-to-consumer avenue.
Okay, so multiple channels. What about predictability?
Now, on revenue predictability, it's true that hardware sales, the bulk of their revenue, can inherently be cyclical, tied closely to product launch cycles, broader market demand.
Hardware is lumpy.
It can be. However, a key and growing factor in their stability is the recurring revenue, generated from data center contracts and software subscriptions like NVIDIA AI Enterprise. This rapidly expanding segment provides critical software tools, services for deploying and managing AI. It's estimated to represent around 10% of total sales, and it's steadily increasing.
Ah, the subscription piece. Growing stability.
Exactly. This growing stream of recurring income helps enhance overall revenue predictability, provides a more stable income stream, buffering against that inherent hardware cyclicality.
Okay, that makes sense. But despite these strengths, they're not immune to threats, right? What are the big ones looming out there?
No company is immune. On the technology front, you have emerging AI chip designs from innovative startups like Cerebras Systems. They're developing different architectural approaches like wafer-scale engines. These could potentially challenge NVIDIA's dominance down the line, although NVIDIA has a commanding lead right now.
New tech threats.
Then there are significant regulatory risks. Those U.S. export controls on their H20 chips to China, that specialized version, designed for the Chinese market under regulations that cost NVIDIA an estimated $8 billion in Q1 fiscal 2026 alone.
$8 billion, just from that.
That's the estimate. It's a critical risk investors must continuously monitor. Geopolitical tensions directly impact their market access. And finally, the geopolitical landscape itself, particularly the risks around Taiwan and its semiconductor industry. That directly threatens TSMC's production, which could severely impact NVIDIA's supply chain for their most advanced chips.
So tech, regulatory, geopolitical, quite a few challenges. Given these, how resilient are they? Do they possess a kind of inherent anti-fragility, that capacity to not just withstand shocks, but maybe even benefit from them?
Indeed, I think they do. NVIDIA's resilience, or anti-fragility, as some might call it, is clearly demonstrated by their strategic diversification across multiple high-growth sectors. They haven't just stuck to gaming, they've expanded aggressively and successfully into AI, data centers, automotive.
Diversification helps.
Absolutely. A concrete example. Back in 2022, when gaming revenue dipped post-crypto crash, post-pandemic normalization, their robust growth in the data center segment successfully, dramatically offset those losses. It showcased their remarkable ability to adapt and thrive, even when one part of the business faces headwinds.
So one segment compensates for another.
Precisely. This broad strategic positioning means they're not putting all their eggs in one basket. They have multiple powerful engines driving growth, providing a substantial buffer against market fluctuations. It's a powerful illustration of their diversified portfolio, acting as both a shock absorber and a growth accelerator.
Okay, let's talk about the fortress. Every great empire has one, and Nvidia's seems truly formidable. What are the pillars of their competitive advantage? The foundational elements creating such an unassailable moat around their business.
NVIDIA's moat isn't just strong, it's multifaceted, exceptionally robust, and really built to withstand intense competition. First, they possess near monopolistic traits, holding roughly 80% of the AI GPU market. That's huge. The barriers to entry are immense, staggering R&D costs, billions just to design a competitive chip, plus that powerful ecosystem lock-in from CUDA.
80% is dominant.
It is. Second, economies of scale. Spreading, say, $5 billion in annual R&D across $130.5 billion in revenue lets them dramatically outpace smaller rivals who simply can't match that investment. It creates this virtuous cycle. Scale enables more R&D, leads to better products, leads to more market share, leads to more scale.
Scale begets scale.
Exactly. Third, network effects. CUDA's 4 million developers create a self-reinforcing ecosystem. This vast community building on NVIDIA's platform makes it incredibly difficult for competitors to gain traction. They'd have to convince millions to relearn, recode, reoptimize. It's a massive hurdle.
The developer army.
You got it. Fourth, brilliant counterpositioning. Their dedicated long-term AI focus fundamentally differentiates them from older CPU-centric models like Intel's, which were slow to adapt to the parallel processing needs of AI. They essentially built a new racetrack and then ran away with the trophy.
Defines the category.
Fifth, significant switching costs. Once companies build their AI infrastructure, train models, optimize software on NVIDIA, they face high expenses, immense time, significant complexity to switch platforms. It's a huge pain point. Sixth, their branding is powerful. GeForce in gaming, NVIDIA in AI and data centers command strong loyalty and premium pricing.
Brand matters.
Seventh, they have cornered resources. They attract the absolute top chip designers globally and hold thousands of crucial patents protecting their innovations. That talent advantage is incredibly hard to replicate. Eighth, their process power. Advanced design methodologies, iterative improvements, constantly optimizing performance and efficiency.
Why the chip improvement?
Ninth, proprietary technology. Architectures like Blackwell offer performance that's demonstrably, say, 10 times better than competitors in critical AI workloads like large language model training. That's not incremental. It's a leap. 10th, timing. Their early, audacious AI investment gave them a critical first-mover advantage. Others are still playing catch-up.
Timing was key.
11th, their speed of execution. Relentless annual product cycles consistently outpace rivals, keeping them at the absolute forefront. Finally, the sustainability of all this hinges on their continuous commitment to innovation. Constantly pushing boundaries ensures their moat deepens rather than erodes.
That truly paints a picture of an unassailable fortress. But even the strongest fortresses, well, they can have vulnerabilities, or at least long-term threats that could potentially erode this dominance. What could be the Achilles heel for NVIDIA, maybe way down the line?
While their moat is impressive, no company is entirely invulnerable to technological progress. In the long term, a significant risk is the emergence of completely new computing paradigms that might render current GPU architectures less relevant. Specifically, truly scalable quantum computing. Or maybe other alternative AI hardware architectures like neuromorphic chips designed to mimic the human brain's neural networks.
Neuromorphic. Interesting.
Yeah, potentially offering vastly different processing capabilities for AI. These could potentially disrupt NVIDIA's dominance if the company fails to adapt and integrate these advancements into their own strategy. It's more of a horizon event, not an immediate threat, but one that warrants continuous strategic monitoring and investment on their part. The future of computing isn't a static target,
Right, always evolving. So if they've built this incredible fortress, where do they go from here? What's the growth strategy fueling their future expansion? Where are they looking for the next big opportunities?
NVIDIA's growth strategy is aggressive, multifaceted, and aimed at capturing nearly every aspect of the accelerated computing and AI revolution. They're intensely focused on market penetration, continually expanding AI GPU adoption within data centers globally. That drives the core of cloud infrastructure for AI.
More GPUs in data centers.
Absolutely. They're also pursuing market development, entering entirely new regions with sovereign AI solutions. This means building AI infrastructure and capabilities within national borders, often for data security, economic self-reliance, national strategy. It's a massive, often government-backed opportunity.
Sovereign AI, okay.
A relentless commitment to product development means continuously launching cutting-edge platforms. like the recently introduced Blackwell and the upcoming Rubin, that's their next-gen AI platform, expected after Blackwell, ensures they stay miles ahead of the technology curve.
Always the next big chip.
Always. And finally, bold diversification. Actively exploring entirely new frontiers like quantum computing, which we'll dig into more, and advanced robotics, ensuring they have multiple robust growth vectors beyond their current core markets. They're really laying the groundwork for the next several decades of tech leadership.
This raises a critical question then. Just how big is the opportunity? What's the total addressable market, the TAM we're talking about, for a company spanning so many revolutionary technologies?
The opportunity is truly immense, almost galactic in scale, really. The AI market alone, where Nvidia provides the foundational compute, is projected to hit a staggering $500 billion by 2030. That offers an almost unimaginable scale of opportunity for Nvidia to keep expanding its footprint.
$500 billion just for AI.
Right. Their automotive segment, with a drive platform for autonomous vehicles, targets a colossal $300 billion TAM. And looking further out, quantum computing, though nascent, could open entirely new frontiers, potentially adding hundreds of billions more in the future.
Huge numbers.
Let's break it down by current segments. Data center AI, estimated $250 billion TAM. Nvidia commands roughly 80% share near monopoly. Gaming, a $100 billion TAM. Nvidia holds about 50%, maintaining dominance. Automotive, that $300 billion TAM. Nvidia currently has around 5% share, but is aggressively expanding as autonomous driving progresses. Professional visualization, a $50 billion TAM. Nvidia captures about 60%.
Wow. So massive markets, and they already have a huge foothold in most. That's a lot of runway for growth.
Enormous runway. These numbers really highlight the vastness of the markets they're in and their significant existing presence.
And it's not just the sheer size, but the breadth of applications, isn't it? Their GPUs power everything from gaming to AI training, autonomous vehicles, and now they have a foot in quantum computing. This versatility ensures broad scalability and relevance across so many critical, rapidly evolving tech areas.
Exactly. While their applications are incredibly diversified, we do need to reiterate that critical supply chain aspect. That reliance on TSMC for manufacturing, especially given the Taiwan geopolitical tensions, remains a notable concentrated risk.
Right, the TSMC dependency.
While there are ongoing, maybe limited efforts to diversify foundry relationships, maybe to Samsung, maybe Intel Foundries, TSMC, remains their primary, absolutely critical partner for the most advanced chips. It's a supply chain diversity concern investors should definitely keep in mind. Any disruption in Taiwan could have outsized effects.
A stark reminder of that global interconnectedness. But what's genuinely brilliant is how they mitigate that specific risk, partly by so effectively diversifying their customer base.
Precisely. Their strategy of serving an incredibly wide array of customers, from individual gamers to hyperscalers like AWS, Microsoft, Google, various government entities investing in AI. Leading automakers significantly reduces their dependency on any single segment.
Spreading the risk.
Right. If one market slows down temporarily, others can often help maintain momentum, providing a cushion. This broad reach across different industries acts as a powerful risk mitigation tool, ensures they aren't beholden to the fortunes of just one sector. It's really a testament to their strategic foresight in building a truly resilient business.
With all this phenomenal growth in market positioning, how long can this run? What about their longevity, say for the next decade or two?
Well, with the exponential rise in AI adoption, the foundational shift towards accelerated computing, the ever-increasing demand for advanced processing power across virtually every industry, NVIDIA's products are highly likely to remain profoundly relevant for decades. I think so. Their foundational role in these transformative technologies suggests a very high probability, I'd say around 90%, of sustained high demand for their innovations. They aren't merely riding a temporary trend. They are building the underlying infrastructure of the entire digital future, powering the brains behind tomorrow's innovations.
Okay, so to summarize their growth picture for you, the individual investor listening, what are the key drivers propelling NVIDIA forward? And what are the main risks that could potentially impede that incredible trajectory?
The key drivers are unequivocally clear and incredibly powerful. First, the accelerating global adoption of AI across all industries. Second, the relentless expansion of data centers worldwide to meet computing demand. Third, the rapid development of autonomous vehicle technology, moving from concept to reality. And fourth, their pioneering research in emerging fields like quantum computing. These are immense tailwinds.
Strong tailwinds. What about the risks?
There are definitely main risks sophisticated investors must consider. First, while gaming is strong, there's potential market saturation in certain segments, which could moderate growth there. Second, increasing competitive pressure from rivals like AMD's MI300X chip, specifically designed for the AI data center space, although it still has a significant gap to close against Nvidia's performance and ecosystem.
Competition heating up.
And finally, those ongoing regulatory hurdles in key international markets, particularly the U.S. export controls we've mentioned. They represent a tangible constraint on potential revenue. Balancing these powerful drivers against these persistent risks is absolutely crucial for investors.
Okay, let's talk numbers then. After all that discussion about their strategic brilliance, what do the financials tell us? Do the figures actually back up the hype?
Nvidia's financial performance doesn't just back up the hype, it practically screams dominance.
Yeah.
In Q1 fiscal year 2026, ending April 27, 2025, their revenue hit a staggering $44.1 billion.
$44 billion in one quarter.
In one quarter, this represents an incredible 69% increase from $26.0 billion in Q1 fiscal 2025, demonstrating truly explosive, almost unprecedented growth for a company its size.
69% growth at that scale.
Wow. And their profit margins are equally impressive. Remarkable operational efficiency. A GAAP operating margin of 49.1% and a net margin of 42.6%.
Almost half the revenue as operating profit.
Pretty much. To put that 42.6% net margin in perspective, for every dollar of revenue, 42.6 cents becomes pure profit after all expenses. That's a testament to their high-value products and strong pricing power.
Incredible efficiency.
If we apply the rule of 40%, that quick measure adding revenue growth rate to operating margin, NVIDIA scores an astonishing 118.1%. That's 69% growth, plus 49.1% margin. It absolutely crushes the typical 40% benchmark for healthy tech companies. It signals exceptional product market fit, near monopolistic power, and tremendous reinvestment capacity.
Way over 40.
Way over. Their return on equity, ROE, was about 91.9% for fiscal 2025. Incredibly efficient capital use, generating nearly $1 of profit for every dollar of shareholder equity.
And the balance sheet, debt.
Very strong. A remarkably low debt-to-equity ratio of just 0.13. They have $10.3 billion in debt, comfortably offset by substantial cash reserves. This low debt means immense financial flexibility. They can self-fund aggressive R&D, strategic initiatives, without relying heavily on external capital. Huge advantage in a fast-moving industry like AI.
Financial flexibility is key.
Their book value, or equity, grew robustly from $43 billion in FY24 to $79.3 billion in FY25. Powerful internal capital generation. And their free cash flow growth. Nothing short of remarkable. Reached $26.1 billion in Q1 FY26, a significant jump from $15.5 billion in Q4 FY25. Diving into specifics, data center revenue at $39.1 billion, up 73% year over year. That's clearly the primary overwhelming growth engine. Shows where the AI gold rush is truly happening.
Let's quickly provide that concise quarterly snapshot again, just for comparison.
Yeah.
It really highlights the sheer velocity of their financial trajectory for the listener.
Certainly. Looking at Q1 fiscal year 2026 compared to Q1 fiscal year 2025, the numbers paint a vivid picture of accelerating performance. Revenue, $44,062 million versus $26,044 million. A stunning 69% increase. Not just growth, it's an explosion.
69%. Okay.
Data center revenue, $39,100 million. While we don't have the direct Q1 FY25 figure here, that 73% year-over-year growth implies massive expansion from previous quarters. Clearly shows their strategic focus and market dominance.
Dominance in data centers.
GAAP net income, $18,775 million compared to $14,881 million. A very healthy 26% increase, even with that revenue surge. GAAP EPS, earnings per share, $1.76 versus $1.60. A solid 27% rise.
Profits growing well, too.
Free cash flow, $26,135 million, a significant increase from $15,519 million in the previous quarter, Q4 FY25. This cash generation is just astounding, provides immense flexibility.
That cash flow is huge.
These figures truly underscore their accelerating financial momentum, driven by that unparalleled demand for their AI solutions.
And how does this stack up against peers?
Like AMD.
Good comparison.
Yeah.
AMD's fiscal year 2024 revenue was $25.8 billion. Their net margin was around 6.2%, and ROE was 9.4%. Their financial outperformance is quite stark, highlighting the benefits of their dominant market position and high-margin product mix, especially in the data center. A clear difference there. And the recent trends. Revenue and net income more than doubling from FY24 to FY25, clearly driven by AI demand. But you also mentioned those export controls still posing challenges, right? Even amidst this incredible growth.
That's exactly right. The doubling of revenue and net income year over year unequivocally demonstrates the immense pull of AI demand. It's the core engine of their financial acceleration, a truly unprecedented surge. However, those U.S. export controls, particularly on the H20 chips for China, remain a consistent, significant headwind. Even as the company achieves unprecedented growth, these restrictions still represent a tangible impact on potential revenue and market access. Highlights the geopolitical complexities they navigate, even at the peak of their success. It's a constant tightrope walk.
Okay. This brings us to a crucial question for you, the individual investor listening. After all those impressive numbers, the strategic advantages, what's the actual price tag? How do we value a company that seems to defy gravity, continually hitting new highs?
Valuation is absolutely crucial. It directly guides your investment decisions, helps you identify whether a stock is genuinely overpriced, fairly valued, or maybe even a bargain. It provides that essential margin of safety against market downturns or miscalculations, grounds your decision in fundamentals, not just emotion or hype.
For a company with Nvidia's aggressive growth, a discounted cash flow, a DCF model seems suitable. But its high price to earnings, PE ratio, what was it, 47.9 for FY25, that clearly reflects considerable market optimism, high expectations for future growth.
It certainly does.
But when you look at it relatively, compared to, say, AMD's PE around 30, NVIDIA's premium really seems justified by its undeniable AI dominance and stronger financials, doesn't it? The market isn't blindly valuing it. There seems to be a strong rationale.
Precisely. The market is clearly baking in substantial future growth for Nvidia, and for very compelling reasons. But let's look at both sides of the investment thesis, as any sophisticated investor must.
The bull and the bear case.
Exactly. The bear thesis, the skeptic's view, suggests Nvidia's current astronomical growth fight might simply be unsustainable. Why? Rising competition from companies like AMD with their MI300X chips, or even from customers like Amazon and Microsoft designing their own in-house AI chips. This could chip away at Nvidia's market share.
The competition argument.
Right. Regulatory risks like the China export controls are a very real present concern, could permanently constrain market access or force them to detune products, impacting revenue. And that lofty PE ratio inherently carries the risk of a significant correction if the AI hype cools down or if growth moderates faster than expected. Some folks on social media whisper, that Nvidia is getting a bit long in the tooth. Like a seasoned rock star on tour for decades, maybe it's time for smaller, hungrier rivals to take the stage. They point to its maturity, favoring newer competitors with potentially more explosive upside.
Okay, that's the cautious view. What about the other side?
Now, for the bull thesis. This is the rally cry of the believers. It posits that Nvidia's formidable, multi-layered moat, their continuous, groundbreaking innovation Blackwell, the upcoming Rubin, and the explosive, undeniable, still nascent growth of the entire AI market fundamentally justify its current valuation.
The growth story justifies the price.
That's the argument. Others on social media are practically yelling, "To the moon!" And honestly, looking at their financials and roadmap, it's hard to argue with that kind of optimism. This isn't just hype, it feels like a structural shift. Analysts, looking at their trajectory and future opportunities, project Nvidia's revenue hitting an incredible $200 billion by 2030, suggests there's still vast upside potential driven by the sheer demand for accelerated computing. The AI revolution is just getting started, and Nvidia is building its backbone.
So, weighing those two, what's the most probable outlook for you, the individual investor, navigating these conflicting narratives?
Based on Nvidia's current financial performance, its robust product roadmap, and its truly unassailable lead in critical AI infrastructure. Well, the bull thesis seems to align more closely with the reality we're seeing right now. However, and this is crucial, investors must remain vigilant. You should closely monitor competitive developments, pay attention to how AMD's MI300X performs in the real world. Keep a keen eye on any regulatory shifts impacting operations, especially market access. It's a dynamic situation. Informed, continuous monitoring is key.
Vigilance is key.
Yeah.
Okay. And what about its current trading status? As of today, June 19, 2025, for those looking at the live market.
As of today, Nvidia is trading around $145 per share. Gives it that colossal market cap of $3.55 trillion. Its price-to-earnings ratio, around 49, is indeed high, signals significant investor confidence in future growth expectations. However, it's critically supported by that incredible 69% revenue growth we highlighted.
Your growth backs it up.
It's not just speculation. It's growth at an unprecedented scale underpinning the valuation. So, While it may not offer a deep discount in the traditional value investing sense, it remains a highly attractive proposition for growth investors, those looking to capitalize on the ongoing generational AI revolution. You're paying a premium for Rolls-Royce, perhaps, but it is still a Rolls-Royce.
Okay, let's zoom out to the current landscape. What are the buzzworthy events, the ongoing conversations surrounding NVIDIA right now? What's happening in their world that you should be aware of as an investor?
There are several key events and conversations impacting NVIDIA right now. Coming up soon, June 25, 2025, is their annual meeting of stockholders. Always a potential reveal point for strategic updates, new product teases, a chance to hear directly from leadership on their outlook.
The shareholder meeting? Important date.
Definitely. The Blackwell ramp-up is in full swing. Its full production is actively driving billions in new sales, clearly a major positive driver for their data center revenue. Interestingly, the GTC Paris 2025 event earlier this year notably highlighted significant progress in quantum computing. That subsequently boosted related stocks across the market, signaling NVIDIA's growing influence in that emerging field.
Quantum buzz from GTC Paris.
On the more challenging side, those U.S. restrictions on H20 chips to China continue to be a critical risk to monitor continuously, especially given they cost NVIDIA that estimated $8 billion in Q1 fiscal 2026 alone. This is not hypothetical, it's a very real financial impact.
Keep watching those export controls. What's the market narrative then? What are people saying on the digital streets, especially for individual investors gauging sentiment?
Drawing from social media discussions, say between June 12th and 19th, 2025, there's generally very positive retail sentiment around NVIDIA. Many individual investors note NVIDIA's clear technical strength, its foundational role in AI, its seemingly unstoppable momentum. You see plenty of posts celebrating its consistent climb.
Lots of bullishness online.
Definitely. However, you also see more nuanced discussions, acknowledging AMD's potential as a competitor with its MI300X chip, even while most still praise NVIDIA's impressive vertical integration and holistic software ecosystem, especially CUDA. Overall, while investors are clearly prioritizing NVIDIA's undeniable AI leadership, there's also an undercurrent of caution about its valuation, about the ever-present competition. It's a mix of bullish enthusiasm tempered by realistic awareness of market dynamics. The crowd is excited, but not entirely blind.
All right, let's turn our attention now to the truly cutting-edge part of NVIDIA's strategy, the future stuff. Will NVIDIA transition entirely to quantum computing? This is maybe the biggest, most futuristic question on many minds. Is this the next big pivot?
That's an excellent and nuanced question. It's important to clarify the strategy here. NVIDIA is not transitioning entirely to quantum computing, not in a wholesale shift, betting the farm on this nascent technology.
Okay, so not a full pivot.
No. Instead, what they're doing very strategically is integrating quantum capabilities into their existing, incredibly successful accelerated computing strategy. Their approach is fascinating and quite risk-mitigated. Through hybrid systems like DGX Quantum, which ingeniously pairs their powerful classical GPUs with nascent quantum processing units, QPUs, and their innovative CUDA-Q platform, NVIDIA is empowering researchers, letting them combine the strengths of both quantum and classical computing.
Hybrid systems, GPUs plus QPUs.
Exactly. This is crucial for unlocking real-world applications in vital sectors, like healthcare simulating complex molecular interactions, finance optimizing portfolios, detecting fraud, energy designing more efficient materials, new battery technologies.
So practical applications.
That's the goal. Crucially, this strategy lets NVIDIA leverage their extensive dominant GPU expertise and their established CUDA ecosystem while prudently exploring quantum's immense potential. This measured approach wisely mitigates the significant risks associated with quantum computing's currently nascent, unproven commercial stage. Rather than placing an all-or-nothing bet, they're essentially building a bridge to the future, not abandoning their current castle.
That makes perfect sense. Strategic integration, not disruptive pivot. But what's genuinely intriguing is the timeline. When might we see these quantum computing advancements from NVIDIA? Are we talking science fiction decades away, or something more tangible, maybe on the near horizon?
As of June 2025, what's exciting is that tangible progress is already being made. It's moving out of pure science fiction territory, the CUDA-Q platform, the DGX quantum systems. They aren't just theoretical. They're already deployed, actively used for research by leading institutions, powering advanced initiatives like Japan's ABC-IQ supercomputer, a major national quantum research effort.
Already in use for research.
Yes. Jensen Huang himself made comments in 2025 suggesting quantum computing is advancing faster than many expected. even hinting an inflection point might be nearing, where the technology becomes truly impactful.
An inflection point. Interesting.
Nvidia is also deeply engaged in key collaborations with leading pure-play quantum firms like Quera, Quantinuum, Google, Quantum AI, plus the Boston-based NVQC, the Nvidia Quantum Application Center. These partnerships underscore their active, serious commitment to R&D, leveraging external expertise.
Lots of partnerships.
But while these technologies are groundbreaking, widespread commercial applications that are truly transformative, they're likely still within a 5 to 10-year time frame. As quantum hardware evolves, we fully expect CUDA-Q to concurrently evolve, supporting larger, more complex quantum workloads, ensuring NVIDIA remains a central player.
5 to 10 years for commercial scale. Okay, so for you, the individual investor, what does this strategic move into quantum really mean? What are the core insights you should grasp about NVIDIA's quantum intentions?
For you, the individual investor, there are some core insights. First, they possess an asymmetric advantage. Their dominant 80% GPU market share in AI provides an incredibly robust financial and technological foundation. This allows them the luxury of exploring quantum without jeopardizing their immensely profitable core business. It's like owning the entire gold mine while also exploring a promising diamond vein next door.
Secure base to explore from.
Exactly. Second, their innovation pipeline is strong and strategic. Platforms like CUDA-Q and DGX Quantum strategically position NVIDIA as a key enabler in the quantum space, puts them in a prime spot to potentially capture significant early market share as this field develops. They're building the picks and shovels for the quantum gold rush.
The enabler role.
And finally, their sheer financial strength. That $130.5 billion annual revenue, that impressive $26.1 billion quarterly free cash flow, provides more than ample self-generated funding for the intensive quantum R&D required. They don't need to dilute shareholders or take on massive debt to pursue this future.
They can afford the R&D. But with any new frontier, especially one as experimental, unpredictable as quantum, there are unique risks, right? What are the specific key risks in the quantum space that NVIDIA faces, distinct from their core business?
Indeed. While the potential is vast, so are the risks, especially in a field this nascent. First, there's intense competition from dedicated quantum firms, IonQ, Rigetti Computing, others. These companies are laser-focused purely on quantum solutions. They could potentially outpace NVIDIA in pure quantum hardware development if a breakthrough architecture emerges outside NVIDIA's hybrid approach.
Pure-play quantum competitors.
Second, inherent uncertainty. The commercial viability of quantum computing remains largely unproven at scale. Developing these technologies entails significant ongoing R&D costs with no guaranteed return for years. It's still very much a research endeavor.
Still early days commercially.
Very early. And third, those geopolitical risks persist. Supply chain disruptions or export controls, similar to AI chips, could hinder quantum hardware development if key components or manufacturing become restricted, especially if they rely on specialized quantum hardware from other nations.
Geopolitics affects quantum too.
Absolutely.
And beyond the known challenges, what about the truly unknown unknowns? Things that could dramatically change the game in ways we can barely conceive of now.
That's where the real speculative fun begins. The true wildcards. One major unknown. Potential for unforeseen breakthroughs in areas like quantum error correction.
Error correction is key for quantum.
Absolutely critical. If a radical advancement happens there, it could dramatically accelerate the adoption and practical utility of quantum computing far faster than projected. That would largely benefit NVIDIA's hybrid approach by making quantum solutions more reliable, more scalable.
A potential accelerator.
Alternatively, we might see other entirely new computing paradigms, like those neuromorphic chips mimicking the brain. Maybe they unexpectedly overshadow quantum altogether, offering a different path to advanced AI. This could divert investment and attention away from quantum, creating a completely different competitive landscape. These are the truly unpredictable variables that could reshape the future. A constant reminder that in tech, nothing is ever truly static.
Fascinating possibilities. So given all this complexity, what's your investor edge in this evolving landscape, particularly regarding NVIDIA's future?
Your investor edge lies in understanding and focusing on NVIDIA's hybrid quantum strategy. This approach masterfully balances audacious ambition with prudent risk management, allows them to participate in the quantum future without putting their incredibly profitable core AI business at stake.
The balanced approach is the edge.
I believe so. Monitoring key events like their GTC conferences, where they often unveil cutting-edge advancements in any new quantum partnerships, will give you early signals of their progress.
Yeah.
Meanwhile, Nvidia's formidable AI-driven cash flows offer that powerful foundation of stability amidst quantum's inherent uncertainty. It's about leveraging their current, unparalleled strength to strategically explore and potentially dominate future opportunities.
What an incredible journey into NVIDIA today. We've covered so much. Their unparalleled leadership, that resilient and innovative business model, their truly unassailable competitive moat, their immense growth
And
trajectory,
financials.
right? Dissected their strong financials, looked at their strategic yet cautious foray into quantum computing. It's abundantly clear why they are such a powerful and foundational force in technology today.
Indeed. And as you continue your own learning journey, maybe consider this. NVIDIA's foundational role in AI isn't just about faster computers or better graphics. It's about redefining what's truly possible across every single industry, potentially setting the stage for advancements we can barely even conceive of today. What new capabilities will you leverage and witness in this rapidly evolving world, powered by the kind of computing infrastructure NVIDIA provides?
A powerful thought to end on. Thank you for joining us for this in-depth discussion. We hope you're leaving with a clearer, more informed perspective on this technological titan. Keep learning, keep exploring, and we'll be back with another essential exploration very soon.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.